Good morning, traders. Good morning and welcome to this live trading webinar. For those who join us for first time, my name is Theo and I do these sessions Monday to Friday. For those who are here and I definitely recognize your names, thank you so much for your support. So let's get started. Ladies and gentlemen, we're going to start with the dollar index and let's have a look what's going on in the market. What happened yesterday? That's the daily chart. We had this trial for a break and a sustainable breakout, I can say. And from a technical analysis perspective, this had been achieved because we do have two closes below the broken support. That's a valid broken support because we have this swing here. So we have two closes below, regardless if the second close was with a bullish candle, doesn't matter. But at the end, we want to see the dominance of the seller. So at the least we have this close, so we can still. Oh, sorry, you don't see the screen. Yes, guys, you are right. So you see the disclaimer, yeah? Guys, you let me talk for 2 minutes and you didn't tell me that you couldn't see the screen. All right, so now, hi Theo, graph is not visible. Ivan, yep, thanks. Okay, perfect. Now you should be able to see the screen. So two closes below this support here. It was the last swing in the market. Then we had this close 2 days ago, this close yesterday. And what do we expect? We expect to see more bearishness coming in. However, from candlestick pattern analysis, we know that this one here is what we call the inside candle or the bullish harami. So we can also see some bullishness, but based on the market structure, we are in a downtrend, officially in a downtrend. So the weight must be more to the downside. And for intraday plays today, most likely it's ideally to find some shorts. That's the way I read the markets. And let's move on. Someone asked from the Zoom webinar. So no, we don't. So someone asked, do we go and sell right now the pairs? No, you don't go and sell right now the pairs. What you do is you understand that if you have sell signals on your intraday trading, can be more valid than buy signals. That's what it means, and that's what we mean when we said about these opportunities here. All right. DAX, two closes above. We said about DAX 40, we would like to wait for some retracement and get into the buy side for a long term. FTSE 100, the same. Dow Jones, the Nasdaq, and the S&P 500. Ideally, we would like to buy them, to be honest, because of the dollar weakness. Now, the technical picture maybe doesn't support it buying at this stage because we are right at this intersection here. The fact that we closed the last few days above the 20 moving average and the 50 moving average shows some more bullishness. So we can use that if we go to the lower time frames for our chart. And here is the thing, for the 4-hour chart traders on the S&P 500, this is a consolidation that broke to the upside, and a pullback here like a textbook could be used to initiate long positions. But right now to buy here, I don't think so. It's a good idea. Not because the market doesn't have bullish sentiment, but due to the fact the stop loss has to go somewhere very low that it won't allow us to get that 3-to-1 we want reward to risk. So why to force it? Yep. Guys, any questions? Any trade yesterday? It was based on our analysis. Yesterday, it was a good opportunity on the Aussie against the US dollar. Okay, Kyle, that's a good call. On the Aussie against the US dollar during the New York session. During the London session, unfortunately, it was pretty much nothing yesterday on the majors. I will show you the trade I took. David, pound Aussie short yesterday. Which time frame, David? Let's start with the pound US dollar. We are sustained above this 20 moving average and the 200 moving average. And with the dollar weakness, the market can push to the upside. Here, it's a conflict we have with this inside candle right here. We hope that this inside candle is going to be on a trend continuation, so we can still looking for buys on the 15-minute around the New York session, or after the webinar. During this webinar, just give me a brief understanding. Yes, Kylo, I said I was about to share the Premium Analytics Today portal, but unfortunately, it's something wrong with my browser, and I didn't have a chance yet due to busy schedule to fix it. So most likely today we're gonna sort it out, or I will check with another browser. So apologies for that, guys. And let's move on. Euro US dollar. We are still pushing towards this resistance, and we will see if it's going to break or if it's going to hold. USD CHF, we expected that bearishness in the dollar to follow with some sell off in this pair. And if we're going to sell off this pair, the next level to, if we go on the weekly chart to find our levels a bit more easy, the next level is down here, ladies and gents. That will be a decent reward to risk. So if the price is going to break below and we find some opportunities, and if we can make reward to risk 3-to-1, then why not? We can consider that trade. Again, if it's going to be a trade there. Aussie US dollar, we do have this area of support here. What trade I spotted yesterday? The trade I spotted yesterday, it was around the New York session, and it was this double bottom formation. And because regardless of this downtrend, I saw this continuation, this reversal pattern here, double bottom. I didn't use candlestick patterns. I use only the Dow Jones analysis with a double bottom. It says that if we break above, most likely we're going to see continuation. And I put an entry that was a buy stop entry here. A stop loss was down there, and not on these candles here, but on this area here, it was the 3-to-1. Okay, I thought to post it on the even though I took the screenshot, I didn't post it on the Telegram channel. I thought some traders, maybe they were trading around so they could see that, but anyway, Next time I should do it. So for today, again, if we're going to have a good bearishness on the US dollar, then we can see some follow through here. The Kiwi New Zealand dollar against the US dollar, it's still on the same pattern, although I don't know why I don't trust it now, because we had these lower lows and lower highs here, so I don't like it. A trade I'm still in for a long term is this USD Canadian dollar. I'm still bearish on this one here. I would like to see on the 5-minute chart that lower highs and lower lows to sell it, and I'm waiting for that. I will be around on the New York session today, I believe so. So I will see if an opportunity arises. USD against the Japanese yen market, it starts around this area. It doesn't just push ideally to the downside, although the Japanese yen, it shows some weakness in general. Ivan, second the graph. What are the 5 MAs you use? Okay, so this one here is not 5 EMAs. There are only 3 moving average. This with blue is the Bollinger Band strategy. So the Bollinger Band indicator, sorry, not strategy, the Bollinger Band indicator, and you can access it from insert. You go indicators, it's a trend filter for me, so you can find it on the trend here, Bollinger Bands, and by the default settings you can plot it. And this one here is the 50 moving average, and this one is the 200 moving average. But the upper and the lower bands are the expansions and the dynamic movements based on price calculation, but also the middle, it's the 20 moving average of the Bollinger Band. So you have kind of a trend filter with a 20, 50, and 200 moving average. The reason I like the bands, and I said yesterday that that's how I used to trade for so many years, it's because in Forex market captures well this volatility around the boundaries. And when I see the price around the lower band, I don't tend to buy, but I stop selling. However, when I see a double bottom on the lower band and it comes at the support level based on the chart analysis, I don't hesitate to initiate trades if my strategy allows that. Australian dollar against the Japanese yen. Why? You can, Ivan and everyone, the reason on this account I don't show trades, it's because that's not my intraday account. I do have separate accounts for end of day trading and for intraday. So if you guys want to see where they enter, where they get out, where they stop out as well, where the take profits are, and so on, I can arrange that for you. That I don't see to be any of a problem. So yesterday we talked about this Australian dollar against the Japanese yen. We said that we are in this area of a good defense by sellers, but we have to see if this is going to hold and how it can hold with a reversal price action. Now, I will give you another way I used to trade before. I don't know if some traders, they're going to resonate with that. But I can tell you, when I had this type of inside candles and I see that the current price took on the daily chart, I used to do it only on the daily chart. When I see a new high developed on the current daily price action, I just simply place a pending order. So I could put a sell stop order here. That was the entry. My stop loss somewhere there, with the expectation to target all the way down here. Okay, why I used to do that? Because to get all the false break out in the market. All right, now if you want to try it, you make sure you use the checklist, the strategies we shared yesterday about trend line support resistance, about if you have some trend filters like here, the moving averages, and your lower highs, lower lows. And then we look at the candlestick patterns. Okay. The euro against the yen, we said that we don't take these two trades here because the market is holding really well above this 200 moving average. It's one of the most reliable lagging indicators for me in the financial market. It's the 200 moving average, because when it breaks, it breaks. When it holds, it holds. And we can see it here that sometimes when we have this rejection, strong price action at this moving average, it can act as a very, very long-term support. Like here, 2 times. Here it tried to retest, it didn't, but the price exploded massively to the upside. Okay. Or this example here with the Bollinger Band, we have this high, so that was resistant, and then it broke. So when the price revisit here, we expect this resistance now to reverse roles and act as support. And this rejection key here came also rejecting the lower band of the Bollinger Band. So we have 2 strong level of confluence so far, that they both activate at the same time the buyers, and also the price action was this long lower tail rejected at this level here. So we have 3 levels, 3 areas of confluence, 3 factors of confluence. So if we could enter here with a stop there, a 3-to-1 trade was well in the way. Pound against the Japanese yen, we are still waiting for some deep retracement here in an area of confluence. We don't just blindly sell based on one moving average. No, we don't do that. We want to have at least 2 factors of confluence before we initiate the trades. Euro against the Aussie is still sideways. This one, nothing trade. Like the gold, with the gold, we said that although we are at this resistance, I wouldn't go to sell it because a strong resistance is here, and I explained it in detail yesterday. All right, the only way for me to sell this resistance here is if on this weekly chart, I will see a strong reversal price action. If I don't see that, there is no reason to try and cut that falling knife. Let's say if it's going to happen here on the daily chart, the market, it's up, is trending to the upside. I go with a trend. I would like to buy on a retracement and not to sell here. Okay. Unless something changes, of course, we're going to change our plan. But based on what we see right now, that's the only information the market made available to us. Pound against them. Let's change it to Bollinger Bands. Pound against the Australian dollar. Short yesterday, David, on the 15-minute chart. Yesterday, it was 11th. No, it was the 10th. You shorted from somewhere here, maybe somewhere here, or double top. Yep, I'm sure if you plot it, if you are trading divergence based on the strategy I shared yesterday with you, ranging strategy, this one here on some RSI or stochastic, I'm sure it will appear with some reversal divergence or negative divergence. So that was a good call. Well done. Yeah. And block. Okay. So you were trading the block. That's great. At least the reward to risk was a decent one, or was just 1-to-1. I hope you got more than 1-to-1. And guys, please refer to some webinars. There are recording webinars on the YouTube, and please refer to them to understand 2-to-1. Awesome. Well done. To understand the reward to risk and how we do trading plan for 2023, it's have to be based on some new method. You have to start thinking in terms of market activity and market performance rather than what you will be happy taking from trades. Okay, it's a very different approach. And gas, we approached this support here. See right now hitting moving average. Okay, so we are approaching this. We approach the support here, and we'll see if it's going to break below, if it's going to hold. It's a very strong area of support, to be honest. So we will see. Ideally, we would like to see some push to the upside. If we break below here, the next very strong support, it's below 170, and it's this area here. Okay, we're going to definitely keep an eye on this support, but it's not that strong. I believe the strongest is this one here. So if we break the next safe level, it's down there. So we have this room. That's about 240, this one here. And that's the N gas. Aussie against the New Zealand dollar. Although we had this let's just do it again. Although we had this this broken trend line, we can expect some retracement. You see, last time we approached this 200 moving average, the price sold off rapidly. So if we're going to reject the 200 moving average again, maybe the same traders, they will try, the big traders, they will try to take it to the short side. We will see what's going to happen. Anyway, we are clearly in a downtrend on the weekly chart. All right, we are not in an uptrend on the weekly chart. Everything is bearish here, but on the daily chart, we are in this retracement development of the weekly chart. All right, so we have to be very careful. If you are buying, if you still hold some positions, maybe from down here, just please be mindful around the 200 moving average, because it's one of the very respectful moving averages in the Forex market. Guys, any pairs you would like to see? We still have 4 minutes to go. Crude oil, any other trades you maybe took or you are considered taking? We spoke about the gold. So here on the crude oil, what can we expect it? We are still very bearish here. Even with the US dollar bullishness, the WTI didn't push to the upside. We are well within this bearish candle. On the lower time frames, it's just a sideways, very messy pattern. So the daily chart gives us a very, very clear indication of what can we expect it can happen here. Usually after this consolidation, the price it can break out in both sides. Okay, it's not that that predictable anymore, so it can just either break to the upside or to the downside. So I'm just not trading this market, to be honest, because there are more clear markets to trade. Bunny, Nasdaq 100, we talked about that in the beginning of the session. David, it touches the moving average. Yes, on the 15-minute chart, you are right. But again, remember, guys, we don't trade the 15-minute chart or any other time frame based on one moving average. Yeah, we want to see the big picture. If we have a clear trend and a price action supporting that on the daily chart or on any other higher time frame, then on the 15-minute chart or on the 5-minute chart, we can find some catalyst to take the trades. All right. So, ladies and gentlemen, I think we have to wrap up for now. It was, again, a privilege and honor to host this webinar for you today. I think I will be around for the New York session, and hopefully there will be some trades. If I see anything, I will post it on the Telegram channel, just for as informative and not as an obligation or a suggestion to anyone. It's purely based on how I see the markets. They can move, and hopefully we can see some strong movements during the New York session. So I wish you happy trading, and I look forward to see you again tomorrow at the same time. Thank you so much. Bye-bye.